All right. Yo, yo, yo. Welcome to QuantBox Live. It is 6:30 a.m. on Wall Street, 3 hours before the open of trading, and it's time to get your global macro on. QuantBox Live helps you uncover the best fundamental opportunities across the global market. We gather aggregate data from sources all around the world, private and public databases, pulling things in from the Commodity Futures Trading Commission, the Fed, the OECD, and all the central banks around the world. And we organize it so you can make wise investment decisions. That's cool. Look at that. These are projections made by the central banks going out 18 months into the future. This is real time sentiment, not based on how people feel, but how they act. This is market sentiment. Look at that by looking at the VIX, the yields, the dollar, the yen, gold, S&P 500 in real time on 3 different time frames, organizing into risk on, risk off baskets. And QuantBox shows you what assets you might be interested in buying and what assets you'd be interested in selling in market conditions like that. Oh my goodness, you're kidding me. What a beautiful thing. So, anyways, if you want confidence in your trading because you're making informed investment decisions, you should swing by quantbox.co. And if you're watching this on YouTube, you're watching it at least 12 hours delayed. And, very often I forget to upload the videos completely. Yeah. So if you find this information valuable, you should swing on by quantbox.co. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Today is going to be governed by news at 8:30, so we're about 2 hours away from that. And we have PCE, core PCE, PCE deflator, PCE, the Fed's preferred measure of inflation. And wow, we talked about it on Sunday, Monday, Tuesday, Wednesday, and now it's Thursday. We finally got the news here, and it's the news that the market's been waiting for. Should be a big mover, should be a lot of volatility around it. People are putting a lot of weight on it. Okay. Meanwhile, let's go around the world. 10-year T-note still at 2.3, but that is really, really, really good. Again, I can't believe it. I've made about a 4% profit this month on treasuries. So the way to look at that is there's a massive rally in bonds. That's crazy for a treasury market in 1 month. So, anyways, that one's cool. Oil way up, right? We got oil cuts from OPEC Plus. We knew this 2 weeks ago. So, anyways, now it's happening. Sweet. Gold making its way, just doing its thing. Okay. Stabilizing above 2000, which is key. S&P 500 hasn't done much, but boy, the analogy I've been using is the S&P 500 is like, a 98-pound ballerina. She's standing on her tippy toes. She's got a 15-pound bowling ball above her head that she's holding. The arms are shaking. The legs are shaking. It's getting heavy. It's getting really heavy. And yeah, and you're starting to see some action like dollar getting strong again. Bitcoin coming down. Remember, euro dollar was at 110 and now it's at 109. That's statistically relevant, but you'll also see technically things are happening at key areas. Like for example, I'll just jump ahead. Okay, there's our nice little trend. Everything is going right as rain. But what QuantBox doesn't do, remember, it's doing its job. But what we know is, what we know is right at this price is the pivot profit zone, the monthly pivot profit zone. And so, yeah, Yeah. And that's what's happening right now. So we'll take a look at that in a little bit. Okay. So let's go back to the scatter plot. No, let's go back to the risk gauge. This is important because we have big news coming up. And this is showing that in general, nothing has really changed all week. Now, this morning, which is much shorter term, we do have some dollar strength going on. Okay. Dollar is 0.55% stronger than before. So we have some dollar strength. That's no so good. And everything else is still quite flat because nothing's really happening yet. But the news is coming. 2 hours. And trust me, there will be volatility. Okay. So this is one gauge of market sentiment. Money's on the sidelines. And in some cases, money's coming out of good trades. That's why the dollar's strong. It's not that they're buying dollar, they're exiting dollar short trades, and those were bullish trades. So as these went from bullish to mixed, or risk on to mixed, dollar gets a little bit strong because that's actually showing people taking profit. Let me do the zoom and a boom, boom. Okay. Oil's way up. Now remember, we knew this, like I'm not joking. 2 weeks ago, the OPEC Plus meeting. Now the biggest thing is it was very possible the OPEC Plus would not adjust their supply, their production, out of fear of being seen as being political because of the mess going on in Israel with Palestine, with the Palestinians. And but they need to do something anyway. So anyways, it looks like they are going to cut production. Okay, great, cool. But that was it's not new news by any means. Shoot, I 2 weeks ago I was listening to podcasts about it. Like it's not new news on the right. It's not new news, but it is happening. And it's good that they're doing their job because remember, they're really trying to manage and balance the market. So if you're listening to something or reading something, or somebody says something like OPEC is going to weaponize oil, or they're using this to punish the United States, and if you read a narrative like that, it's nonsense. Yeah, yeah, be careful. Be careful what you read. All right. So anyway, so if you're like, well, okay, oil's up quite a bit. All right, fine. Get rid of that outlier. And there's our scatter plot. And I can see your brain ticking, tick, 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 tick. And you're calculating y equals mx plus b. Oh, look, there's a negative integer on the slope. Not good. Not good. So that is leaning now toward risk off. Okay. Bitcoin down, euro dollar down, pound dollar down, Aussie dollar down. Whoa, whoa, whoa. Now, depending on what happens with PCE, that could radically change. So you might look at this as an opportunity, like you might want to sell buy the dips and sell the rips. It's one way of looking at it. So let's go into it. I want to show you the technicals. I guess we'll start here. Hey, look, the yens are falling. Yeah. Down, 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 up, sell, 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 down, 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 up, sell. Maybe, right? In particular, if we get quote unquote bad news today on PCE. But notice that we've made it down to actually where bulls live. This is the problem of getting onto a trend a week late. Okay, like now if you're just doing things, you're like, now it's going to fall. Well, I actually covered this when we were way up here, that this could just be a pullback, not a reversal. I showed it at a higher time frame. So this was working its way up. And by the way, all these pretty little colors like this brick red, this means out. I mean, that's the news to use. And then lower, right? Lower high, lower low, lower high, lower low, lower high, lower low. But now, if you're a bull, this is actually a long-term buy zone. We don't know if it'll hold, but that's what it is. Excuse me. All this goat milk and oat milk. So, anyways, we're now making our way to the buy zone. So, for traders that are just now selling, yeah, this might work, but it has a lot more risk than before. Okay. And then down here's the next one. Okay. So, this is a whole zone. So, it might continue dropping, but it might not. You might be too late. If you don't sell the double top and if you don't sell the lower highs, then you're not quite getting it. Because now we're in the middle of the range. You see, the monkey is in the middle. Okay. Bears are up high, bulls are down low, monkeys are in the middle. So, anywho, be careful. Be careful. Everything is heavily influenced by the news today in 2 hours, which is not fundamental. It's just volatility. I want to show you the kitty cat. Okay. Again, QuantBox has limited technical analysis. What the technical analysis of QuantBox is based on analyzing trend and whether it's in the direction of the fundamentals or counter fundamentals, but it's not doing more than, well, it's doing some linear regression and some projection, and it's doing some standard deviation and stuff. But again, that's not, it's statistical analysis more than it is technical analysis. What is technical analysis? If you sell that, okay, if you sell there, and that's the best selling pivot of the entire month, according to the training courses at investorbootcamp.com. You can't get a better selling price than that. That's the best one there is. Look, it held, bro. Okay, cool. Then what? If you sell there, the conservative target is right here. It's in the course. It's in my book from 15 years ago. That's what we call a swing trade. It's cool, right? Yeah. So now what? Well, again, QuantBox is going to do like, okay, here's a deviation, 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 and then you got to calculate the mean price and all that kind of stuff. And so now you take the number, the value of how far it went this way, the value of how far that went that way, the value of how far this way. Okay, and you take that in value, and it's actually variance. And then you take the square root and you standardize it, so you get trends like this, and you calculate the slope, and if everything stays the same, you can project 7 days in advance. What QuantBox doesn't know is, well, a trader. Okay, we're not talking about a statistical analysis of a trend. That's just math. A trader is going to think counter trend and plausibly continuation in the direction this way. Again, now that's where standard deviation comes in. But someone else might say, inflation's coming back and everything's bad and the dollar wants to get strong again. And maybe that's seasonality. But I just want to point out, this is not a random walk down Wall Street. This is not a random walk down Wall Street. It's what you should be doing. Okay, this is in short, and now you're out for profit. Okay. So how did you make money on this? Well, by and large, you shorted the US dollar, right? Okay, cool. So you're out now, right? With profit. Are you actually buying the dollar? Yeah, you're actually buying the dollar, but it wasn't your intent, was it? You shorted the dollar here, and now you're out of the position there. So you bought the dollar back at a better price. And now you keep the difference. So the dollar might be strong today, but nobody's actually positioning themselves long. They're only exiting shorts. Okay. It's a key component of trading, and it's usually the last thing you learn if you've survived that long, if you haven't gone bankrupt before, right? Yeah. But it's a key component. Just because it's going up doesn't mean people are buying it. I gotta throw some sort of. All right, let's look at this. Okay. So on this 4 hour, you could argue still technically bullish, right? We're all above the ribbon and all that kind of stuff. Let's add some more data to it though. We can go daily confluence. Okay. And remember that whole best selling price? If you're a bear on euro dollar, this is the best selling price for the month of December. Doesn't make you a bear. But if you're a bear, you'd be selling at 110. Now, it might be too early because we are looking at this. We still have, this didn't make a lower low. This is a higher high. So the logic is at some point, a trend will continue. But we have to also be good at observing the death of a trend and the birth of a new trend. Is that what's happening now? Well, I don't know, but we can look at it. Um, Once again, this is the highest, right, conservative price for the week based on our projections. Now, we could have gone a little higher, but I think the psychological price of 110 is important. Look, the conservative target for the week for bulls is 110.10. Cool. So we hit 110.10 and it stopped. So how do we read this chart now? This market is bullish by definition. 21 is above the 55. But we've broken through and the market's becoming more conservative. It's bullish, but a lot less aggressive. And that makes you vulnerable to lower highs, makes you more vulnerable to double tops. But once again, no one is selling. Well, nobody should be selling. So, what would describe this giant move? People are concerned about PCE today. And maybe they didn't like preliminary GDP. Whoa, whoa, whoa. That has to be revised multiple times yet, right? But it was a big number. So they're like, oh my God, the Fed's going to jack up interest rates further. No, no. Okay. Well, so they have concern and they're getting out of euro dollar longs. Okay. Oh my God. I have to read that whole question. Hang on. Well, you typed it. Hang on. So this makes us vulnerable, but we also have to realize that this news is coming out and it could just change. But we certainly don't want it lower than that. I don't even like how low it is, but this is still based on technical analysis. The likely scenario. But if we are down here, it's bad. Okay, it's bad. And we'll have to clean up that mess tomorrow. But you know what? It hasn't happened yet. It's vulnerable. Okay. There's some danger there. There's no doubt. It's a real danger, right? It's like driving home on New Year's Eve. It's dangerous. There's lots of drunk drivers. But you got to get home. And you can't just lock yourself in a cave and not celebrate with your friends and your family. But there is a real danger you have to pay attention to. So this is still an uptrend, but there is danger out there, and we know it's an event. So this is where you can deploy an event driven strategy. And those types of strategies revolve around a time and a place. You know it ahead of time. It's an event, and you're trading the volatility. AKA you can scalp the news. Have you thought about what PCE is going to be? Is it going to be a big number or is it going to be a low number? Well, I think it's still calculating the fall in oil prices, right? And there's still a base effect. Remember, much of our analysis of inflation has to do with we used to have 10% inflation. Now we have a lot less, so it looks dramatic. Like, did you see what did the euro inflation what was it? 2.4 or something? Yeah, like it's really low again. Well, yeah, low compared to an astronomical number last year. But if you compared it to 5 years ago, it'd be a big number, right? Like we call that a base effect. Right? Let's say year after year after year, you made $100,000. That was your salary. Okay. And then one year you won the lottery, 10 million bucks. Nice. And now you've invested that money, and no matter what, you make $300,000 a year. Well, in your second year after winning the lottery, that sucks. You only make 300,000 a year. That's horrible. You made 10 million last year. Now you only make 300,000. How does poverty feel? Well, how does it feel like? And you're like, yeah, but if you look at what I used to make, I make 300% more money. I'm rich as can be. Well, no, your income is down 90%. Okay. So, anyways, you see, and we're going through this base effect where really, honestly, except for oil prices coming down, nothing's actually changed. And everyone's hooked on these numbers, but they don't understand the math, right? Well, there's PCE, there's core PCE, doesn't include that. And then there's the deflator, which anchors it to a different, so Google it, man. Okay. But yeah, so the Fed is going to look at core and the deflator, which is an anchoring mechanism. I mean, what's the official? It's too early in the morning to go do but we'll do it. PCE deflator. All right. What's the official? Hang on. We'll do Investopedia. All right. How do they describe it? Okay, what is PCE? It's a lot like CPI. It just has a basket of goods and services that adjust more quickly. So, for example, in the CPI, it's a basket of goods and services that measure inflation, but they still measure the price of iPods and Walkman. Okay. And someone might say, really? A Walkman? And all the kids are Googling, like, what's a Walkman? Yeah. Anyways, yeah. So PCE updates its basket differently. more quickly and differently, and it accounts for substitutes. Because, like, for example, CPI might have like apples are up 400% because there's some sort of apple tree disease and production's really low, and it just keeps tracking this high number, where PCE will better say, well, we're just going to switch over to pairs for a while because people can't get apples. So the prices might be high, but nobody's buying apples. They're like, I don't want to pay $5 an apple, so I'll buy a pair for 50 cents, And so PCE is a little bit more dynamic of a basket, but I want to get to the deflator one. I think you understand core. Blah, 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 blah. I actually had to do the math one time, the difference between CPI and PCE. And I don't remember any of it. And of course, there's no deflator. I Googled it and they didn't answer it. See, AI is taking over the world. This is like the old search engine that gives you lousy stuff. They probably like it because there's lots of ads. So, anyways, I'll leave it for you. Get the deflator. Yeah, see, I typed in deflator. Okay, how about this one? Quantifies the effect on the inflation measure of the treatment of owner-occupied housing. This is terrible. The weights assigned to products. Wow, that's a terrible description. What's a major MB? Okay. Yeah, see, all these, nobody wants to talk about it. All right, so anyways, I'll let you Google it. There is a difference, but the Fed is going to watch it. No one's going to pay attention. All right. Anyways, let me read the question. The Feds are aiming for 2%. Correct. Currently at 4, a little less than that. Yep. And even though the minutes indicate upside and downside risk from tightening, the Fed remains focused on 5.5. We're currently at the top of the range. Does this mean they have to adjust their range? No, they will not. Or wait for the inflation to come down based on previous tightening? Yes. Wait and see data makes sense based on. Well, the biggest issue right now, okay, is that we're at 5.5, and PCE and CPI and various forms of it. So then you can get core, and core will be another number, and the deflator will be another number. Because like the deflator is like, instead of measuring it to last year, which has base effects, you're going to anchor it to like 2015 prices, right? And you get a different number. But the various versions, if what I've been saying recently is, if PCE is 3.5 or CPI or whatever your measure of that is, and the Fed is at 5.5, the big news here is if you go back 25 years, that spread is unusually high. The Fed was raising interest rates when we were at 5%. And now it's at 3.5 and falling. Like the rate of change is slowing, but it's still falling. And so a 200 basis points, 200 bips is too much. It's too restrictive. Okay. Okay, that's the issue. It's too restrictive. And that's why you get like Bill Ackman 2 days ago said um, he's setting up his hedge funds based on the idea that the Fed will raise early next year, not in the middle of next year. Because, right, so if PCE comes out 3.2 and then in December it comes out 2.9, then the Fed definitely has to cut. What I'm saying is different. What I'm saying is the base effects will be gone next year. We're going to compare 2024 numbers with 2023, and the 2023 numbers are down. Oh, and I've been saying that I think oil can be up. Oil can be up to 90. Oil can be up to 150, depending on what and what does not happen. But up, I think, is very, very realistic. So if we lose our base effects, inflation stops falling. Minimum. Actually, because of the base effects, the new base effects, I actually think inflation will rise. Because remember, this year has been disinflationary. Well, what if next year is just flat? Well, then it'll look inflationary because now we're comparing it to a positive number with a negative number, right? So, anyway, so you could have inflation even if nothing happens in the math. But if oil goes up, okay, then inflation does go up next year and the Fed doesn't cut. Bill Ackman's wrong. Yeah, Jessica's right. If it not falling is a form of rising when you do the comparison. Okay. So, in my humble opinion, with the data that I have in front of me, I think Bill Ackman is probably wrong. Now, that sounds like hubris. He's got a couple of $1 billion more than me. So he must be right. No, that's not the case. I've never lost hundreds and hundreds and hundreds and hundreds of millions of dollars. Bill Ackman has. Okay. So he is his style of trading, the way he personally makes money, not the fund, him personally, is a form of degenerate gambling. That's what he's paid to do. No, but that is that type of hedge fund. They need a 10,000% return or a negative 100. So he's like, dude, that's my thing. And it's sellable. Do you see like a lot of people think that way too? So he can just pick up the phone. He's like, give me 100 million. I'm going to short early because I think the Fed's going to cut. Yeah, we do too. Boom, here's 100 million. He just makes a bunch of phone calls, raises $1 billion. This is why he goes on TV and tells everyone he's going to do it before he does it. He's raising money. It's a raise. He's doing a cap raise. So, anyways, then all the money flows in and he shorts. He doesn't care. It's not his money, right? So he's going to collect a 220, and it's just a fund. It's just another fund. Slaps together $1 billion, incorporates a fund, throws all the money shorts early. If it explodes, doesn't matter. He collects his management fee. Okay. And if it wins, he picks up his 20% of his billion, and la-di-da-di-da. And it's just another fund. I taught people yesterday how to build a portfolio, which is a style of a fund. Really, a portfolio is just a fund. It's just its use is different. But one of the things I thought about last night, I thought about the lecture, and I thought, you know what, I can do one more lecture where we build a fund together. And I started playing around with it last night. This is what I do at like midnight, with no sleep. And I'm like, let's create a fund based on vice. Meanwhile, I'm drinking a Manhattan, smoking a cigar. I'm like, what should we build a fund around? What should be our theme? Because that was one of the things we were talking about is thematic investing. I'm like, well, let's just do that. So I thought maybe I don't have time for any of this, but maybe I'll throw together another lecture and we just build a vice fund, build a portfolio. Yeah, cool. And I started, I'm like, oh, this is neat. I found a lot of things I wouldn't invest in, and then a couple of things I'm interested. So, like, okay, good. That's the process. So, anyways, we'll see if we have time. I don't think I have time, but maybe I do it later. We can do it anytime and I just put it back in the course. All right. So, anyways, look, this is really, 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 really heavy. You have to decide now, of course. Do you think this for the rest of December? Okay. Or is it going to head up today? Okay. Maintaining a higher low. It's all dependent on PCE. So then you're ask yourself, well, what do you think PCE is going to be based on the math, not what these idiots on TV talk about. Okay. And then, of course, if we get a number that produces down, you're probably going to get something like this over the next week or so. Remember, somewhere in the middle of this range, like let's say we head down for a week or two. What do we have in 12 days? Fed meeting. So it could be out, 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 in. And once again, nobody actually selling. So next year could be very rangy. Yes, that's what I actually said in January of this year. I said next year would probably be a flat year. Was it Bank of America this morning that said 4,200? Okay. I think is their target. Wait, we're above 4,200, right? So they're calling it a negative year. But here's the funny thing. What is the long-term aggregate return of the S&P 500 over the last 50 years? 8. So if you do the math of this big $100 billion firm with thousands of employees, it's going to be an average down year next year. Like they're just like, it's going to be negative 8%. Oh, great. Thank you. Like it's so sloppy, lazy, but this is what the big banks do. Hey, is it going to be a down year? Yeah. How down? Average. Is it going to be an up year? Yeah. How up? How up? Average. Yeah. So like, really? You can't come up with a better answer than that. So anyways, that's a bearish call for next year. So you better know how to make money in a negative 8%. Okay. Yeah, I will accumulate. I will accumulate during that period. Okay. So, anyways, I want to pull. You people are going to pay a lot of attention to euro dollar today, so I want to point that out. I want to point out the dollar move there. We know the yens. Oops. We know the yens are doing their thing, and that I don't believe is really a risk on, risk off issue, but much more related to concerns about yield curve and all that kind of stuff. But we've now hit the bearish target as a repeat. Um, these were if these were answering the question, the hypotheses, if the yen pairs were going to continue their uptrend, it would do it here, plan A, or here, plan B. Neither failed, or neither worked. They both failed. But meanwhile, I was already short this one. And we knew one of them was probably going to work. Either my short term profit was going to break even, but euro was going to go up, or euro was going to come down, but I'm already short pound. So I was only like, if euro yen reversed up, and this is how I teach you guys to trade technically, then we know it's going to go up here or it's going to go up here. Did right? No entry here. Is this an entry? No, that's not an entry. That doesn't look like a double bottom. Is this a double bottom? Is that a higher low? No. Is this a double bottom? No. Is that a higher low? No. Okay. Yeah. So this was allowed to run. But if it had double bottomed and right, then I would be in this trade and probably take profit on that trade. But I'm already at a situation where I can't lose. So I was just prepared to be wrong so that I could be right somewhere else. What most people do is just stare at their trades. Okay. Especially losing trades. This is what amateurs tend to do. Stare at their losing trade going from negative 100 to negative 200 to negative 300. And what they're doing is they're not seeing all the good trades that have developed that they could have just taken the loss when it was small and moved over to the better trade. Instead, they'll stare at their bad trade, watch it get worse until bankruptcy hits. Yeah. Yeah. Ouch. Ouch. Don't we? All right. So look, we'll leave it at that. We don't have to make this more complicated as it is, or than it is. We have PCE today. It's important. It's going to move the market. Which way? Well, that all depends. A good number might not be good enough, and that might be bad, but the number could be good and might be too good, and that would be bad. We might get a bad number, and that's good because then the Fed doesn't have to do anything. But then in 2 months, we'll say, well, that number is bad because that means we're going into recession. So, like, yeah, be careful today. So, the volatility will arrive today. It will arrive. It'll probably be an okay number. It will be lower than before. Like I said, we still have base effects going on. And we still, I believe it's counting the old oil data when oil fell to 65. Well, now we're at 80, but it hasn't counted that yet. So imagine the next PCE in December. Oy vey, that might be the massive profit taking. So, anyways, be careful today. Okay. Oh, Jessica says, hey, what I don't understand is the yield curve control, nothing in their statements are different. Right. So now, right. Oh, and by the way, it's not the negative. So part of it, Jessica says, okay, the yield on the official central bank interest rate is still negative. So one thing that is likely to change by UATA soon is they jack up interest rates all the way to zero. Is that going to be an official statement before it's happened? No. So now this is where you got to do your sentiment type research, like listen to the speeches, listen to the Q&As, listen, that kind of stuff. Another one is yield curve control isn't about the interest rate, it's about the yield. And they've been adjusting the yield from 0.23 to 0. What was it? 39 and then 0.5 and then they let it pop. And they came out after and said, we're okay as high as 1.0. We don't want it at 1.0, but we're okay with it at that point. And they've decided to be flexible. So all of this changes the yield curve control and allows yen strength. And they may be at the point where, so if you have to look at now the yield on the 10-year Japanese government bond. So 10-year JGB yield chart. Okay. See, I actually do this stuff. All right. So let's do this one. It's there. Okay. And we're nowhere near that 1.0. So it's just floating out there. And what may be happening is going into a risk off period of time, or let's say profit taking period of time. People just don't need to short the yen right now. So you might look at this and say, as long as the yield on the 10-year T-note in Japan is lower than 1.0, you can buy the dips in yen pairs, and you'll have serious concern about yield curve control if this was tickling 1.0. But for a year, this was under 0.5. Okay. So we traded it here over and over and over and over again. And then last year it was down here. So the big concern is, are they going to allow it to go to 1.0 and higher, and at the same time change the the interest rate from negative to zero, to neutral. And so to get that information, that's not quantitative data, it's qualitative data. And you're going to have to just Google it, right? And this was my advice a couple of weeks ago. I said, spend way more time than you normally do. This was about 2 weeks ago. I give this advice. I said, you may not do any research on what the governor of the Bank of Japan says. You may not pay attention at all to anything that comes out of Japan. And I said, but now what you want to do is start reading interviews and speeches and reports given by the government and by the central bank. And you need to get a sense of what they're talking about. You need boots on the ground now because something might be afoot. And I said, if you're going to be the expert, that's what you need to do. But all that is qualitative. Okay. Meanwhile, I shorted the double top. Same. Because we can see it as a realistic probability. And I got a double top on a monthly. Well, there's my deep research. I'll take a shot and jam my stop. Because if yield curve is being adjusted or going away, probably some yen strength. So qualitative, not quantitative. By the time they announce it, then it's quantitative. Peace on earth. May the pips be with you.